Okay. 3, 2, 1. Good morning, traders and investors around the world. Welcome to this February 15th edition pre-market prep plus Wednesdays with Wedbush, joined by Gerald Pascarelli. He's covering the beverages and the cannabis stocks for Wedbush Securities. We'll bring him on just in a minute to discuss the earnings seasons for the beverage companies. S&Ps up and down and all around. We are down 19. Let's call it 20 handles at 41.25.75. We've pre-market low at 41.16. I'll be keeping an eye on that. That's a weekly number for me. The buck is strong, up and down, but up 65 cents today at 103.78. Bonds slipping a little bit, trying to hold the low of the move. They're just down a few ticks here at 126 and 27.30. Crude down 85 cents, leaning on yesterday's low at 85.78.21. No one wants to be into gold. Gold down $20.70 at 88.44.70. Silver, that's been the leader on the downside, now moving towards $21, down 39.8 cents at 21.47.5. Bitcoin futures, they're up $425. Perhaps the Citadel getting into that Silvergate. Big position in that is giving a lift to the cryptocurrency up $430, 22,765. Let me stop the screen share. Let me bring in Gerald Pascarelli, who's been covering the beverages stocks and cannabis, recently the cannabis stocks over at Wedbush Securities. So, Gerald, how you doing today?
I'm good, Joel. How are you? Thanks very much for having me.
Okay, doing good here. So we got through earnings season, and we're going to start first with the Pepsi earnings. I can't remember when I had you on last, but we were talking, and you were like, "Well, people are still going to be buying the beverages. Let's maybe smaller amounts, but they're still going to be out there." So let's talk about the Pepsi, and then we'll get to the Coke earnings.
Yeah, sure. So Pepsi reported last week. They're typically the first non-alcoholic beverage company to print, and they're a good bellwether on kind of what to expect in the broader space. And Pepsi certainly had another good quarter where they delivered really strong top line, really strong EPS. What you're seeing from Pepsi and from their peers as well is a lot more of the same that we've been seeing over the course of 22 for the better part of a year now. These companies are all generating above algorithm revenue growth because they're generating above algorithm price mix. They've been able to price.
What do you mean algorithm? What do you mean algorithm?
Yeah, sure. So these companies have stated medium to long-term targets for mid-single digit revenue growth and high single-digit earnings per share growth. That's going to hold consistent between Pepsi, Coke, and Dr. Pepper. And so mid-singles, you're talking 4 to 6% organic revenue growth. These companies are all doing double-digit revenue growth at this point, and they've done double-digit revenue growth over the entire duration of 2022 because they're pricing through as much of this commodity inflation as they can, and they're getting minimal impacts to their volumes. And so right now, the consumer looks resilient. How long that is going to last into 2023 is really the big question mark on how long these revenues can continue to remain outsized. But it was a great 2022 for Pepsi, and similarly for Coke, who reported yesterday, very similar trends. Outsized price mix driving outsized revenue growth, which is really the best lever in terms of flowing that through to their earnings per share.
All right, I'm just looking, and I see your fundamental reasoning in these stocks. We'll go to the Coke earnings here in a second. But what we've been seeing so far a lot is these stocks that had good 2022s. Not so much in 23. Now, you did have a bad January in Pepsi, and you've had a nice rally back. I don't know if they haven't figured the 50% retracement yet. But if you're going with the January trend in this one, Do you, you're perhaps looking at this rally in Pepsi, and there's rally in Coke, as you have the, well, not so much in Coke. Is this could be a little bit more of a selling opportunity at these levels? Perhaps a rebound off the January low. What's your price target on Pepsi?
Our price target on Pepsi is $190. So that's,
Okay.
That essentially implies 24 times earnings when you look out to 2024. It's typically where, like, if you look at a 12-month price target, it's anywhere between 23 to 26 times. Just based on timing, and Coke is going to be a similar price target. That's at $68, which is also 24 times. When you look at January was a very odd month. You had tech stocks that were up 30%. It seemed like it was more risk on. And so there are multiple dynamics at play when you look at staples. If it's a risk on environment, then staples are not going to be as attractive as they were in 2022. That largely still remains to be seen. And then when you have a rising interest rate environment, it's not overly great for staples either. So we think that just over time, as these revenues and earnings come in, and we think there's upside to guidance, we think there's upside to street estimates, you'll see a lot more of what you've seen in 2022, which are beat and raises, drive multiple expansion, and drive your base, your base earnings higher.
And is that where they've traded historically, on a forward earnings basis, or is it a little bit high, a little bit low for these companies?
No, it's 24, 25 times is relatively in line, depending on the year that you're looking at. It'll ebb and flow, based on inflows, obviously. But I think 24 times for Coke or 24 times for Pepsi is certainly reasonable when you look at the historical precedent.
Okay. What about any other beverage stocks in your area of coverage and in their Q4 reports?
Sure. So Dr. Pepper will report next week. They're a little more, we're a little more cautious headed into that print, just because when management gave an analyst update in December, they were kind of talking down numbers for 2023. It was going to be another investment year. They're getting outsized commodity inflation and things like green coffee, as well as beverages. And so, we're thinking that they're going to come in at a mid-single digit guide to their earnings, which would be the second year that they would come in below algorithm, but we think that's largely priced into the shares. To the extent they're able to come in at mid-single digits to high single digits, like in a bracketed range, we think that would be well received. Anything below mid-single digits, we think the stock would sell off, but we think that's unlikely, in particular, given what Coke and Pepsi just came in at. So that's one to watch. And then we actually recently just upgraded Celsius Holdings, which is an energy drinks company, major disruptor within the U.S. energy market. So
I want to go to that one in 1 second,
Yeah,
but what the Keurig? I did DPS, and I know that's not the symbol. What's the symbol on Keurig?
Yeah, it used to be. It's KDP.
KDP. I know they messed me up on that one. I just wanted to take a quick look at the chart on that. Just hanging out comfortably near the lows of the move. But if you look at it historically, you could say it's consolidating, near the top of the move and really near the all-time high. So we got some Celsius fans in here. Pretty volatile stock, trading up $1.11 today. Give us your take on Celsius Holdings.
Sure. So we initiated coverage on Celsius in October with a neutral rating, because that was right around the time that they were starting their transition into the Pepsi distribution system.
That's right.
And so anytime you have a major distributor transition, it comes with the risk that you're going to have disruption. You're going to be deprioritized by your current distributors. There could be delays. There could be issues with the new distributors learning the products. That was executed almost flawlessly. When you look at scanner data over the 4 months where this transition took place, Celsius accelerated their market share gains at retail every single month, and now they are making market share gains that are among all-time highs. And so we looked at, the price target, and the stock was something we were looking at. quite a bit. And the stock actually sold off on news that they needed to pay rapper Flo Rida $83 million in a lawsuit. If you think about the lawsuit, it's a one-off item that has absolutely nothing to do with their fundamental performance. They could afford to pay the fee if they have to. They're going to appeal it, but they have over $700 million in cash. And so we used that pullback in the shares as a lever to get more constructive on the name. And we think they're going to have a really good 4Q. When they print. And, the best read for these guys, being almost 100% US exposed, is through Scanner. They have a ton of white space to offer. And so we think this is going to remain a top line growth / market share story. And from what we're seeing so far, they're showing no signs of slowing down. So very encouraged.
So you're not scared away by the rich valuation on it.
I'm not, because, when you look at this company, needs to be valued on EV to revenues at this point. They have an inherently lower gross margin because they do predominantly finished goods. And they are investing heavily behind growing their top line. And so when you look at their SG&A as a percentage of sales, it's going to be way higher than their peers. So using an EPS, a PE or something along those lines isn't really fair, because that's not where this company is in their life cycle. And so when you look out to 2024, it's 6.5 times sales, which that would compare to Monster, that would compare to where Coke is. I know that those other two companies are mature stage companies that are at a different point in their life cycle. So it's not a pure apples to apples comparison. But I mean, I guess the point is that this year EV to revenues are 11 times, which seems rich. When you get out a couple of years, 6.5 times seems certainly more reasonable.
Have you had that drink? I'm not a big energy drink. Have you had it? Is it sugary?
There's no sugar.
Okay, that's what I thought. Yeah, okay.
And that speaks to kind of where their positioning is in US energy. They're a disruptor because they're what you call functional clean energy as opposed to legacy energy. They offer more than just simply caffeine, whether it's in Celsius's case, it's thermogenics. They have fat burning capabilities, but some of these other functional beverages offer things like amino acids, and BCAAs and all.
Do you feel a boost? Do you feel like an immediate boost from those? Like I said, I've never had one of those energy drinks.
They're good. I like them quite a bit, and I certainly do. I feel
okay.
Like I could be biased because I'm recommending the stuff.
I know. No, you could convince me. Next time I see one in the store, I'm gonna grab one of those puppies and give it a try. Okay, so let's go to beaten down marijuana stocks here. Holy mackerel. Canopy Growth hanging out at the lows of the move. I've even looked at Tilray lately. This is one area of the market of the growth or, high PE valuation stocks that really hasn't taken off yet. And if this is going to be that kind of year, are we looking at some opportunities here in some of these stocks in your area of coverage? Break them down one by one for me.
Sure thing. So just to be clear, I cover the U.S. multi-state operators, and I do not cover the Canadian LPs. I follow them, but we cover 4 cannabis stocks at this point. It's Green Thumb Industries, Cresco Labs, Curaleaf, and Trulieve. Those would be considered 4 of the top tier U.S. cannabis operators today. So what's happened with cannabis is the stock made a big run from October of 2022.
Which one are you talking about now?
These stocks tend to move in tandem with one another.
What's Trulieve then? Because that's one of
TCNNF would be the ticker.
Right. Okay, go ahead.
And so what happened is in October of 2022, really through almost year end, these stocks made a big run up because there was increased optimism that Congress was going to pass something called the Safe Banking Act. It became abundantly clear towards the end of December that was not going to pass. And so what you saw was essentially a 50% sell-off in every one of these stocks. This is not trading on fundamentals. This sell-off was completely trading on built-in optimism around regulatory reform. We are recommending the 4 stocks that we covered. There's a reason why we initiated on those 4 stocks. We think that they were among the 4 best places to put your money. And it's important to note that, like, whether or not safe banking passed, it has nothing to do with fundamental performance for any of these companies. So this was a symbolic bill to essentially show that Congress was making inroads in, becoming serious about real regulatory reform, and that failed. I think if there's one thing to learn about regulatory reform, is it's going to remain a show me story on a go forward basis. We'll believe it when we see it. But the encouraging thing is that although our timing in early December to launch on these stocks was not ideal, these stocks certainly look to have found a floor. And that's really going to be around 0.5 to about 1 times EV to sales, which is super cheap, in particular for a growth category. And so at these levels, we're going to recommend the stocks. Our PTs are a little out of date because we haven't updated them since we initiated, so they're subject to change. But we're continuing to recommend the stocks here, in particular because it looks like they did find a trough, which is
okay. I got the TCNNF up here. Just give me a couple other symbols of the ones, and
yeah, sure.
Yeah.
So green thumb will be GTBIF.
Okay, let me take a look. GTBIF. Okay,
Correct.
similar. I mean, I will say they've kind of stopped going down and they're consolidating, right?
It looks like they found their footing between a half a turn and 1 turn, on EV to sales, which is, I mean, it's cheap, but it's good that, knock on wood, they look to have stabilized. You can run. I could give you the other 2 tickers, Joel, but if you ran your charts, I could guarantee that they would look exactly the same.
Okay.
So the important thing just to know about cannabis at this point is that for the last few years, this has been, like with most growth sectors, it's been a top line driven story. Top line is not going to be the focus, at least over the next couple of years. It's all going to be about their free cash flow, their net income, cash balance, their margins. So,
all right. Gerald Pascarelli coming over from Wedbush Securities, covering the beverages and the cannabis sector here on this Wednesday. Gerald, thanks for having us. We'll have you back on again real soon.
Thanks, Joel. Appreciate it.
Great conversation with Gerald Pascarelli. Oh, Florida ask about MSOS. And I mean, these things, all these charts look the same. Pick your poison, right? You're buying it here at the $7 area. Stop yourself out at the low end. All these charts do look the same. Cannabis not participating. Good morning to everybody here. Let me put my charts back up here, and we're going to rip through some symbols. Did you guys enjoy? I got a question for you guys. You guys asked me questions. Did you guys enjoy the banter on the pre-market prep show today? Because I thought it was a little lively. I thought it was fun. I thought we definitely got some different opinions in the market here, but I just always like to get your guys' opinion. One programming note. We'll be doing pre-market prep with stock odds today, but there will be no closing print today at 3:30 to 4. So you guys are going to have to figure out that close on your own. But there we go. What do we got? Change agent in the house this morning. Michael Smith says a very entertaining morning. Yeah, you can fire up Triple D there. So I definitely got him going, and some good rants there. But guys, you guys hear my opinions. You hear it every day on the pre-market prep show, and you hear it here. So everyone has their own kind of investing style, technical analysis, fundamental analysis, and like you say, that's what makes a market. But boom, Florida. I don't know. I kind of be feeling that way too. on these trash stocks. But you know what? Here's a great field for the market. Looking at the tape and the hours when the markets are closed, and in following the order flow. So that's important. But what do you guys? We got just a few minutes here today. That change agent had to turn down the volume. Did you have to turn down the volume on me, or was it on him? I'm just curious. What are you guys looking at? What's on your radar? Change agent, hammer saw. The Celsius. I try to do numbers on this thing, and I know he has this bullish outlook on it. Let's see here, CELH. Ah, man, oh man. To me, you kind of, I mean, going back 2, 4, 6, 8, 10 sessions, you're pretty much between 90 and 100. So you get that breakout over 100. I think you got some move, maybe do a 50% retracement of this entire move. But I don't know, 3 down months in a row. So not as bullish as on this one. All right, see what we got here. Boom, boom, boom. And change agent, I think are you really asking about triple D? Because there you go. I mean, you've had a nice run here in 2023. You had a pull back to the 1050 area. So I'm not so much as far as like where buying is today, but if you're looking for this move to continue, you've had, what do you got? Did you drop? How low did you got? Let's see. What I think is really important for this one over the next couple sessions is 1150. You had the big move up, you had the decline. Now can you get back half of this move and just keep on going? And that's going to be important for me. So if you're looking at triple D, that 50% retracement comes in right in the area of a double top. No, let's call it the triple top. If you want to include that 1178 area, you can make it a quad top. But that's what I'm looking at here for the room to the upside. The longer it takes to get back up to that 1150, boom, rolling over, perhaps taking out that 1050. Oil. And I'll just go to the crude oil futures here for Sabrina. I think I told you that's my niece's name. Boom, 57 cents. You guys have heard me talking about crude for a long time, and what's kept me out of the uber bullish camp on this is just the way the back months have been trading. The backwardation versus the contango. So let's do a quick exercise here. Your March is trading at 78.50. So let's go CLM23. Hope that works. See, indecision time here. Wow. The March and the June are trading at parity. So tough call here. If it was trading at a discount, I'd probably, if the front month was trading at a discount, that'd be a little bit, bullish. If it was trading at a premium, I'd be bearish. But boy, oh boy, I just think you're at a trading range. I think the most important telling thing on this chart, Sabrina, is, you've had some big runs into the 80 handle here in 2023. The first run was stopped out at the 82.50 area. I must have talked about that one time. I was blue in the face. Then you had the dip into the lower 72 area, and your run came up to 80. And then it looked like to have failed. So, lower highs, just going back all the way since December has me a little bit more in the bearish camp here. What do I get to miss? Real quick, 2 quick stocks. I talked too long here about the markets. Down $3, taking out the low of the move. Under 230, look out on the downside here. Not much in here. You had a pair of lows at 230. Coming back on the upside. I'd say resistance at the close at 220, 235.58. And then the last stock of the day, Para, PA. I'll try and get 2 more in. Para traded up. Let's get the pre-market trading in here. Oh man, get on the right chart here. Very important to take out the pre-market high. The pre-market high comes in at 2330. You get followed through on that. Your next, you got a daily high here too, right here at 2339. If not, things open up to 24. But it's important to take out that pre-market high first and the final And the final stock of the day, not short, long, or any investment advice on the NSC. I was just saying that the 230 area was an area of a couple lows. And if in fact you take that out today, things are thin on the downside from a short-term perspective with the trading in the low. Important to get back to that close yesterday at 235. 28. Oh, that's opening bell here, folks. I got to hop. No closing print today. Back with you guys at 10:30 pre-market prep with stock odds.